Wall Street sees a sharp sell-off as investors grow pessimistic about the interest rate outlook. Major indices notch their worst day in a month. The Dow tumbles 800 points. The Nasdaq sheds 550 as well. Asian markets track Wall Street losses and trade lower as the tech sell-off deepens. The GIFT Nifty is also indicating a gap down start for our own markets. Oil prices gained marginally after a 4% slump the previous day as investors weighed concerns about global oversupply. Meanwhile, gold prices fall as the broader market sell-off follows the US government reopening. In key earnings, Tata Motors CV business reports a 6% revenue rise from the previous year, but market share losses continue, and the company also reported a net loss of 867 crore compared to a 500 crore profit last year. Meanwhile, Hero MotoCorp reports a 15.7% rise in its bottom line on a year-on-year basis. The revenues were up 16%. And the counting of votes for the Bihar elections begins at 8 a.m. today. Most exit polls gives NDA the slight edge. The state registered a historic voter turnout of 67.1% in the two-phased election for the 243-member assembly. It's the final trading day of the week, but not short of any action whatsoever. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Center. I am Hormas Fatakia. Let's first take a look at how the Asian markets have started off. And after a swath of green all through the week, it's a swath of red across the Asia Pacific, and all of the indices tracking the overnight losses on Wall Street are trading lower. The Hang Seng down almost 1.25%. The Taiwanese index too trading with losses of 1.5%. Losses also coming in from the Nikkei in Japan, which is down 1.5% as well. The Kospi, the outperformer of the year, is now the underperformer of the day today, 2.5% lower on the South Korean benchmark. So all the Asian indices currently trading with losses of anywhere between 1% to 2.5%. Pull up the GIFT Nifty. They'll give you an idea of how our own markets are likely to start off. Well, it's still a gap down compared to the earlier ticks of 130-point down tick. It's a marginal recovery, if you could call it that. It's a 105-point down tick nonetheless after all the cool off that we saw from the highs of the day in yesterday's trading session. But to set you up for today's trade, our research team is right here with the trade setup, the stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. Firstly, Gaurav is here to get all the market cues we need to watch out for. Gaurav, good morning. What are you watching out for today?
Well, yes, yesterday when we look at Nifty tried to breach that 26,000 mark, but it did not do so. In fact, it gave up all the gains and it ended it with flat gains. When we look at today's setup, now today we are seeing some kind of activities happening around 25,800 puts and 26,000 calls. So these could be the levels for resistance and support. But apart from that, one key thing to watch out for is that today is the result of Bihar election. Now, as per exit polls, some of the exit polls say NDA is at a upper edge at a marginal level. So that is something that will define the market and the tone of the market today. Other than that, when we look at the corporate options, today is the record date for Infosys, record largest share buyback of 18,000 crores. We also have GSCL who has a record date of share buyback of worth 300 crores. And apart from that, Websol Energy System. Now, there will be a stock split in the ratio of 10:1. So let's watch out for these stocks. When we look at the IPO market, we are seeing some kind of action today as well. Tenago Clean Air. Today is the last day of subscription. Remember, the IPO has been subscribed more than 3 times. We've got Capillary Technologies who will come up with the IPO today worth more than 800 crores. And we will also be having Pine Labs getting listed. Remember, this IPO was also subscribed almost 2.5 times. Other than that, yesterday, when we look at the trading, Ashok Leyland, Muthoot Finance, Vedanta, Laurus Labs, all these players were at all-time high levels. So let's watch out for these also. Remember, Muthoot Finance also came up with good set of numbers. And lastly, when we look at the earnings calendar, today is the last working day of our earnings calendar. So we've got important results like Siemens, Glenmark Pharma, Exide Industries, Natco Pharma, Tata Motors Passenger Vehicle. Now, all these stocks will be in our radar today.
It's a long list. It's the final day of the earnings season, but a long list nonetheless. Gaurav, thank you for that. And to take you through that long list in greater detail, Vinny is here to tell us more on that. Vinny, good morning.
Hi, good morning, Urmas. It's Friday, but that list is just getting longer. Luckily, it's just the last day of earnings season today. So let's keep an eye out on Hero Motor first. Steady quarter that's coming in Q2 FY26. A profit growth of 16%, revenue growth of 16%, and double-digit volume growth. That is something that has overall aided the revenue growth for the company. Even when you look at the margins, they've come in at 15% versus 14.5% last year. Margins are at a multi-quarter high, this 15%. So keep an eye out on that. We're expecting some positive move maybe we could see here. Jubilant Food, good quarter again coming in for the company. Good performance in terms of revenue, 20% growth there. Profits of the company, 54% growth there. And margins have remained stable at 20.3%. So keep an eye out on that. NSEL, again, NSDL, I beg your pardon. That's again a one that has reported a good set of numbers. Payments bank business, that's done well for the company. Overall profit growth of 23%. Margin improvement that has come in as well. 32% is what the EBITDA margin has come in at, around 150 basis point improvement on a sequential basis, and revenue was up by around 28% on a sequential basis. Voltas has reported a weak set of numbers this time. When you look at it, revenue largely in line, but that major miss came in on the profit and the margin front. So margin at 3% versus 6.2%. Profits just at a decline of 74% as well, and revenues fell by 10% versus expectation of 9%. This decline obviously was that EC segment, which has not done well. PNC Infra, what we're seeing coming in, that revenues are down by 21%. Profits of the company, yes, they're seeing an increase in terms of profit, but there's a one-time exceptional gain this time of 162 crores. The management has lowered the FY26 revenue guidance to 5%, so that is going to be a key factor, and we could expect red come in here, and they expect EBITDA margins at 13% for FY26. Afcon's Infra, that also we're expecting red here on the screen today because revenue is just a 1% growth, margins at 11% versus 11.6%, and they too have cut their revenue guidance for FY26 to 10% from previous 20 to 25%. GMR Airports, that we're expecting a good quarter that's coming from the company. So expect green here, 47% growth in terms of revenue. Margins have seen a sharp improvement as well, and the company has swinged into a profit this time versus a loss last year. Akums Drug, red expected here, weak set of numbers from the company. Profits down by 38%. Revenue seeing a decline of 1% as well, and margin contraction of around 200 basis point. Tega Industries, on the other hand, good set of numbers. A steady quarter come from the company. Revenue seeing a 15% growth, mainly led by the equipment side of the business. That has seen a 56% growth, and they've maintained their margin guidance as well as a whole full year FY26 revenue growth. So could see green here.
Vinny, thank you for that update. Lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, opportunities for both bulls and the bears yesterday, but what's the FNO data indicating?
So two big cues. Bihar election result will start getting the trends or say leads from 8 a.m. And on the global front, in the absence of any major cues after government shutdown was lifted, investors have taken profit out, like profit booking we have seen yesterday, and there was a big fall in the Wall Street. Now for today, following these global cues, GIFT Nifty is indicating a start with cuts of around 100 points. As of now, it's down almost 108 points. On the domestic front, the data has improved in the last few days. Look at the flows. In the cash market, FI sell figure was just rupees 400 crore, while DIs have bought more than rupees 3,000 crore. In the index futures too, FIs have turned buyers and they have bought more than rupees 450 crore. They have reduced long positions, but at the same time, they have also reduced short positions, and here reduction was more than 3,300 contracts. In the options data on the call side, 26,000 and 26,200 have seen maximum addition in the open interest. Also, premium has increased for both these options. And on the put side, we have seen 25,500 put that has seen maximum additions in the open interest. Support for Nifty, 25,750, very important level. Resistance remains around 26,000. Yesterday, we saw that Nifty crossed intraday 26,000 level, but we have to see that if comfortably Nifty breaches or crosses that level. For Nifty Bank, support 57,900. Resistance remains around record high of 58,600, and above that, in the band, sale remains in the band. And stocks amongst stocks that will be in focus, Muthoot Finance has come out with a very strong set of earnings, so keep an eye on that. And two stocks, Supreme Industry and Astral, might be in focus because government has withdrawn the export control order.
Sudarshan, thank you for that update. And now shifting focus to the highly awaited Bihar Assembly elections. The question everyone's asking is, will Nitish Kumar continue his winning streak or Tejasvi Yadav would get the victory? Parikshit is now joining us to take us through all of that. Parikshit.
Out of 243 seats in Bihar, 122 is the magic number. At least 8 polls are giving the NDA a clear edge in this election. The News 18 mega exit poll is giving 140 to 150 seats to the NDA, 85 to 95 seats to the Mahagathbandhan. Prashant Kishore's Jan Suraj party is set to win 0 or maximum up to 5 seats. As per exit polls, the BJP will win 55 to 65 seats in both phases of the Bihar election, while the JDU will win 60 to 70 seats, making it the single largest party. In the Mahagathbandhan camp, the RJD is set to win 50 to 60 seats and the Congress only about 15 to 20 seats. While the NDA did not initially project Nitish Kumar as the chief ministerial candidate, Union Home Minister Amit Shah later said that there was no vacancy for the CM's post in Bihar. This means Nitish Kumar is likely to lead the government in case NDA wins again. In the 2020 Bihar election, the Tejasvi Yadav-led alliance fell short of a little over 12,000 votes when Nitish Kumar formed the government with a slim majority. This election campaign was marked by sharp personal attacks and polarized rhetoric. The NDA leaders invoked memories of Jungle Raj under Lalu Prasad Yadav and said that Tejasvi Yadav represented a return to that era. The BJP also alleged that Mahagathbandhan allies want to protect infiltrators. Meanwhile, the opposition targeted Nitish Kumar's health and claimed the BJP would replace him post-elections, as it did with Eknath Shinde in Maharashtra. The NDA has promised jobs to 1 crore people and has said that the government will set up factories in every district to strengthen local manufacturing. The Mahagathbandhan has promised 1 government job to every family in Bihar, 200 units of free electricity and a monthly unemployment allowance for graduates and postgraduates.
Parikshit, thank you for that detailed breakdown. Of course, counting of votes begins in just a few minutes from now. Take a short break, get you all the action from Wall Street on the other side. Welcome back. On to action from Wall Street. Indices there ended sharply lower following steep losses in other Nvidia and other AI-related stocks. Even as the record US government shutdown came to an end, the investors turned cautious amidst lower expectations of a rate cut due to inflation worries. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
Markets were down across the board today, with tech stocks showing some of the biggest losses. Investors also grew pessimistic about the interest rate outlook, even as the U.S. government reopens after a record-setting shutdown. The Dow down 798 points, the S&P 500 down 113, and the Nasdaq fell by 536 points. Foreclosure filings climbed again in October after sitting at historic lows in recent years, according to new data released Thursday. While the numbers are still small, the persistent rise in foreclosures may be a sign of cracks in the housing market. Florida, South Carolina, and Illinois led the nation in state foreclosure filings. And the IRS announcing new contribution limits for 401ks and other workplace retirement plans. Starting in 2026, employees can defer $24,500 into workplace plans. That's up from $23,500 in 2025. And one big change for workers over 50, those who make catch-up contributions will no longer be able to put that money in pre-tax. Those contributions will automatically go into an after-tax Roth account.
Kate Rogers, thank you for that update. Now, Fed officials cast a doubt over the rate cut in December, and the markets turned cautious as stocks took a hit while Treasury yields moved higher. Steve Leisman brings us a roundup of what the alternate inflation data suggests and where the Fed stands with regards to rate cuts.
It was CPI data in the United States, but because of the government shutdown, there was no data. But among the alternative data sets that Fed Chair Powell said he's looking at is one from State Street called State Street Price Stats. It scrapes millions of retail prices off the web and calculates a change. It has crept up slowly since the president put tariffs in place, gaining nearly a full percentage point since May and underscoring the caution of some Fed officials about cutting interest rates. The good news is it's been stable for about 2 months, but it doesn't measure services, which is an area of prime concern for the Fed. The data series tracks the BLS headline CPI number pretty closely, though it has run a little cooler than both since the pandemic. And Atlanta Fed President Raphael Bostic said he opposed a December rate cut in part because of survey data from businesses gathered by the Atlanta Fed showing they intend to boost prices. Bostic, who is not a voter, announced his retirement in February, said he also saw inflation spreading to core services. CNBC now counts about half of the voting members at the Fed as either outright against or cautious about a December rate cut. Boston Fed President Susan Collins joins Kansas City Fed President Jeff Schmidt, who is likely against a December cut, having dissented at the last meeting. Presidents Goolsbee and Musalem and Governors Jefferson and Cook have all suggested going slowly or being cautious about cutting rates. Meanwhile, Governors Myron, Bowman, and Waller, they all are presumed to favor a cut, perhaps along with New York Fed President John Williams, though he's less certain. Fed Chair Powell is also an unknown. Before Collins spoke, markets put a 64% probability on a December cut, but that has now fallen to around a coin toss, or 50%. There's still a 69% probability of a rate cut by January. It will likely take clear data on a weakening job market or stable or declining inflation to convince the hawks to cut in December, or an equally clear sign that inflation is headed to target.
Former Fed Chair Lael Brainard believes that the Fed should protect the labor market. Listen to what they said.
The hawks and the doves have both really hardened their positions since the last meeting. There are risks on both sides. From the tariffs, there are risks of inflation staying high. You know, it's already been 3% for the last few months, and it hasn't been at its target for nearly 4 years now. So that is why the hawks are quite concerned. On the other hand, the doves are concerned that the U.S. labor market was really softening quite substantially the last few payrolls prints before the government shutdown, and nothing that they've seen since then has allayed those fears. My own leaning would be to protect the labor market because the risks there, I think, are the more urgent risks, but I think reasonable people can disagree, and I think you could expect to see dissents either way the committee goes.
Lael Brainard also spoke about the U.S.-China trade ties. Listen.
In the first Trump administration, they really targeted their tariffs on China. They were really very focused on the bilateral relationship and regaining a level playing field with China. This time around, they have imposed tariffs across the board on all trade partners because they are now targeting a large amount of fiscal revenue. So it is a fiscal arithmetic, not a strategic calculus, that is driving their tariffs. And as a result, U.S. manufacturers and consumers are being hit, but also America's partners are being alienated at a time when America needs those partners to work with it to strengthen their hand relative to China in all of these sectors.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Thank you for that, Hormuz. I'll start with the crude oil prices because after that very sharp decline that we saw a day before, the prices seems to be trading steady right now. But with the bearish Q, because the IEA says that the global demand is expected to increase by 0.7 million barrels per day in this year, but the supply could increase by 3.1 million barrels per day. That takes us to a global surplus of 2.4 million barrels in this year and nearly 4 million barrels per day in the next year as well. So most people believe that unless something changes drastically, we perhaps are looking at bearish crude prices going forward. But what has done well has been metals as a sector. So this week, we're looking at gold prices heading for a 5% weekly gain. Silver is up 9% in this week. The U.S. government signing an opening for a U.S. government shutdown, the longest one, by the way, is what has led to slight profit taking in the Asian markets right now. And also because the treasury yields have continued to climb also is weighing onto the markets. But apart from that, on a week-on-week, on a month-on-month basis, we still are trading in the positive for the gold and silver prices. Such has been the case for metals as well, where zinc is trading at January highs. We are looking at HRC steel prices at July 2025 highs. Tin is now trading at near 6-month highs as well. And so is the case with copper, which is trading at a 2-week highs. So across base metal prices, whether it is ferrous and non-ferrous, the markets are looking at strength continuing. The decline in US dollar index, individual supply concerns, expectation of strong demand going forward, all has been quite supportive.
Manisha, thank you for that update. Just before we take your leave on the show, the Asian markets continue to remain lower. There's no change in that aspect as of now. The Nikkei has just managed to increase its losses. The Kospi too down 2.5% as well. The Hang Seng index is down 1%, so it's a marginal recovery from those lows. But the data coming out of China has been a disappointing one this time around. Industrial output down 4.9%, missing expectations, and the retail sales also missing expectations. Take your leave on this edition of Power Breakfast from me and the team. Thank you for watching. Bazar Morning Call on the other side.